Yo, what is up, gang? We made it. One day in, one more to go, then the market opens. As of now, we have 27 hours and 50 minutes until the market opens, in case anybody's wondering. As I'm doing this video, of course, a little bit under 24 hours, guys. Big week coming up, as we know. I see we got some shills and bots. I think they come out deep on the weekend, roaming the World Wide Webs. I got another doozy here. Last night's video was pretty mind-blowing. I seen a lot of the comments over there. I did see my video over on the old Reddit mobile on a couple pages, which was super cool. I didn't even think anybody knew who I was, let alone that, besides our lovely little happy family here with our 6.26K subscribers. Thank you guys, by the way, too. I forgot to mention when we hit over 5,000, which is pretty cool for a little baby channel that I started. So thank you all. Seriously, I love the comments. Like I said, I can't interact these last couple days because of the daughter situation. But anyway, I got a doozy here. We're going to touch up on what I talked about last night. I found another article and a quick little video clip. But something is happening with that 6/18 date, as we touched on yesterday with the HYG, the bond market, blah, blah, blah. If you haven't seen that last video I did, definitely check it out in there. It's pretty wild stuff. Real quick, let's check over here. I'm obsessed, as you guys know, with checking in on Citadel. I've checked probably 6-7 times today just for sport, and they've been there every day. But look at this. It's midnight down here, guys. Midnight on a Saturday night. Citadel Securities busier than usual. Isn't that crazy? I checked on the other weekends. Sometimes they're there during the day a little bit, but they have been here constantly throughout the day. What is going on over there? Nobody scale the building. Nobody freak out. Let's not bust out any windows if you're down there in the Chi-Town area. But they're there. They've got something going on, right? Maybe boxing up their stuff, selling some crypto, whatever's left of it. Who the hell knows, right? So let's touch on. I got a couple things that are going to make me mad, or make you guys mad. Maybe it pissed me off, and then a couple other things. Let's touch on from last night's activities. Look at this here, dated June 8th. This is going to go back to the previous video with the HYG stock that I talked about. But Federal Reserve set to sell off bond ETFs it amassed in 2020. Okay, there's a quick little video, but the Federal Reserve went on a massive bond buying spree that included purchases of bond exchange traded funds, ETFs, at the height of the pandemic last year. Now the Fed looks to sell off these assets. The Federal Reserve will soon begin selling off corporate bonds. Okay, let's take a quick listen to this really quick, and then we will carry on. Cary Grant
will begin winding down its secondary bond market corporate facility beginning relatively soon. A Fed official saying this decision is unrelated to monetary policy. Now, the SMCCF, the secondary market corporate credit facility, these sales will be gradual and orderly, the Fed says, and will aim to minimize the adverse market impact of making these sales. This was established during the pandemic, an historic foray by the Federal Reserve into purchasing something other than bonds and mortgages. It currently holds $13.7 billion in corporate debt. Just by way of context, the corporate bond market in the U.S. is about $46 trillion. So it's a very small amount, both of what the Fed holds, which is more than $7 trillion, and as well as a very small part of the bond market. The plan is for the Federal Reserve to sell the ETFs that it purchased first. Remember, that was how it first got into buying secondary corporate bonds, and then sell the corporate bonds individually. The plan for the Federal Reserve is to wind this facility down, this pandemic emergency facility, wind it down by the end of 2021. Wilf?
And Steve, just to be clear, this is unrelated to the tapering discussions and interest rate levels. If some people are trying to link this in their head, does this now lead to the first step with the next to come?
The Federal Reserve does not want you to make that linkage. They want you to say they're doing this as part of, they did this emergency foray and into secondary bond market to help the economy. Those facilities closed in December. It's been closing some of the other emergency facilities, and now it's going to it closed this, and now it's going to wind it down as a normal part of business. Whether or not that linkage is going to be made, well, people are gonna jump, especially because people are talking, as you know, about the Fed potentially discussing winding down its $120 billion of monthly purchases of bonds and mortgages, of treasuries and mortgages, sometime this summer.
Shepard Smith.
Very interesting stuff, you guys. Very, very interesting. I am jacked about this week. I don't know what's going to happen. Are they going to massively attack this thing all week, try to get it under the, get some of these calls in the money out? I don't know. Or are they just going to say the hell with it and start covering? I don't know. But this is wild. To get, like I say, every other video, it gets crazier by the day with uncovering this whole bag of worms that we talked about yesterday. And it's crazy. It's above my head here. I'm just dumbfounded. Okay, now let's jump into over this here. I seen this posted over on the old Reddit. I stole just a picture of this. But this was 12 years ago. This was whenever it was posted. This is in the '08, the bailout. The bailout. Remember the damn bailout? As the world went bankrupt, Wall Street celebrated with champagne. They even poured some on the protesters below while laughing at them. Here's your protesters. Here's your hedgies up here with a nice little, we got nice little jackets and suits going and champagne. And this guy looks like he's taking a picture down here. What a bunch of scumbags. Jesus Christmas, right? Now let's carry on this conversation. This is the one that pissed me off. How hedge funds took over America's struggling newspaper industry. This is pretty recent, June 11th. This is crazy here. Watch this. Let's read just a little bit of this. I'll pop this in there and that Federal Reserve link in the link if you guys want to read through that and watch the video again or whatever. But I'll pop all that in there. As COVID-19 ran rampant across the United States in 2020, local newsroom across the country cut back even as they covered the biggest story in decades. Remember COVID, pretty damn big deal. Reporters are laid off and furloughed. Some who stayed were offered buyouts. It was a catastrophic and uncertain time for American newsrooms. During the pandemic, more than 70 local newsrooms closed across the country. This is the key one here. Listen to this nonsense. Today, some of the largest newspaper groups in the country, such as Tribune, McClatchy, and Media News Group, are owned and controlled by or in debt with the hedge funds or private equity groups. In fact, hedge funds and other financial firms control half of the daily newspapers in the United States, according to blah, blah, blah Financial Times. So they own half of the newspapers. Jesus, we just find out more and more and more. That was really upsetting. There was nothing like reading an old standard newspaper. Was there, pulling a newspaper? Anybody read that anymore? Damn it, I miss those days. World Wide Web's killed everything. This one over here, you guys, this is a quick, brief one here. Let's listen to this, and then I got one more thing on the way out the door. But Gary Gensler, I don't think he's talked about too much on how much of a savage this guy is. And, sure, it's hard to trust these guys and whatever, but this guy is really, what's he been in there? 2 months now, 2.5 months, whatever? And he has blasted a lot of new rulings and everything else. So I think this is going to be between us, Reddit groups, all of us, apes, whatever you want to call us, and Gary, pretty big deal. I think it's going to change a lot. But let's listen to this really quick. This is showing him cracking down. Thoughts on him, what he's going to be doing.
Action of its earnings on lobbying is that material. It usually knows it. Gensler did.
What do you think? I mean, obviously, he feels compelled to say we're not ignoring this. I get that, but what is he hinting at?
I mean, listen, Gary Gensler's a super smart guy. He's not only a guy that's schooled on Wall Street, senior partner at Goldman Sachs, but he's very good politically, and he knows how to handle these types of hearings very well. But if you listen to him closely, you got an idea of where he's going with his agenda, and you do get an idea how progressive it's going to be. Now, I spoke with corporate lawyers earlier today before the hearings began, and these are lawyers that represent major companies in the country, corporate America. They do some white collar work for individuals. They have to deal with the SEC and help companies disclose and deal with regulatory matters coming out of the SEC. And they're really worried about Gary Gensler. They believe that he will be someone that will be answering to Elizabeth Warren and Bernie Sanders on policy issues, that they will force him. Remember, particularly Sanders is on the banking committee, and that's where he was before today. I mean, the banking committee is the uber regulator for the Securities Exchange Commission, which is corporate America's top cop. Elizabeth Warren has a seat on the Finance Committee, which also is very powerful in regulation. So they think that Gary Gensler is going to be pushed by them to adopt progressive causes. And what's fascinating about it is if you listen to a exchange he had with Pat Toomey, the senator from Pennsylvania, Republican, it was all about what do you consider material? Pat Toomey raised the issue: if Apple spends just a fraction of its earnings on lobbying, is that material? It usually isn't considered material, so they don't have to disclose it. Gensler didn't say that. Gensler came back and said that may be material based on other bits of information. You get what you see what I'm getting at. The notion of imposing climate change initiatives at the corporate America level, of forcing these companies and embarrassing them to say they deal in mostly fossil fuels in their business operations, is something that's is going to be policy of the Democrats. It's going to be pushed by Warren and Sanders through the SEC, and it's going to be pushed through the SEC by virtue of the notion of materiality and what must be disclosed. We should make one other point here. Gensler also said on Robinhood, he's likely to look at the behavioral prompts in its business model. If you know anything about Robinhood, one of the ways it lures people in is if you buy a stock, you see explosions and confetti and all this stuff. It's the gamification of it. If that's what they're doing, if they're going to take a real look at that, Robinhood's going to have a hard time coming public, because that's part of their business model, to make this a game and something that needs to be, you can have fun at, meaning trading. Anyway, that's where we stand right now, Neil. It's going to be a 180 from the Jay Clayton SEC hands-off policy. These guys are really coming in with some progressive.
Yeah, I'm bullish on Double G until he proves me wrong. I know a lot of people don't want to trust these guys, but I think his intention, he's said enough in the last 2.5 months for me to like what he's doing and to change our damn stock market so we can actually have a little bit of a fair advantage, right? One last thing and we're out of here. How do we not keep talking about Citadel? Look what these guys tried to do. This is posted on the old Bloomberg here. Citadel Securities settles with fund over secret algorithm. Now watch this. They tried to steal somebody here. Citadel Securities reach a truce with a British hedge fund over the attempted hiring of a senior trader, ending a lawsuit that was set to consider the makeup of secret algorithm. Mr. Kenny G himself, market maker, and GSA Capital Partners LLP reached a confidential settlement, GSA said in a statement Thursday. The agreement followed claims that GSE Capital obtained information on a closely guarded trading strategy when it sought to recruit a former quant researcher. Citadel Securities didn't respond to requests for a comment. Well, of course they didn't. Why would they? The firm was seeking at least $40 million in damages. The London lawsuit filed at the end of 2019 centered on a crucial automated trading model known as the ABC strategy that cost Citadel Securities more than 100 million ducats to develop. The algorithm was no secret that just 15 of the company's 3,000 employees had access to it. Jesus, you imagine this thing? I want to see it. Is it something out of the Battlestar Galactica? Lawyers for Citadel Securities had insisted that the officials at GSE Capital couldn't unsee the information or put it out of their minds. Oh, yeah, of course not. Jesus, Murphy, it ain't one thing, it's the next. You know what, you guys? My Lord. Okay, let's get some rest this evening. Got one more trading day. One more day until trading day, I should say. Leave me a comment and a like and subscribe if you have not would be super duper awesome. And I'll try to get back to some comments here tomorrow. I should be a little bit more freed up. All right, you guys, get some rest. Hydrated, protein, always. Remember,